Hello, we're excited to be back in the SMS studio, and we welcome you to our 2025 Life Insurance Outlook webinar. We're glad you could be with us. I'm Steve Rohrig, the AVP of Training here at SMS.
And my name is Mark Lyons. I'm the Director of Sales here at SMS. If you're new to SMS, welcome. And if you're one of our existing advisors or agents, we want to say thank you for your partnership and your business. We're looking forward to a great 2025 built off that momentum that we had for 2024. So thank you for that.
You bet. Thanks, Mark. So as the Director of Life Insurance Sales here at SMS, you're fully aware that life insurance is a very versatile financial tool, can help people really at every phase of their life. But today we're going to look at the critical issues that are impacting our advisors and the important work that they're doing with their clients. And then we'll also explore the impact of life insurance and the opportunities to discuss life insurance planning in the context of today's current events and the headlines. So just a little bit of house cleaning before we get too far. Today's lines have been muted. So if you have a question, please submit it through the Q&A function or submit it at the survey at the end, and we'll be sure to get back with you. Should we get started?
Let's start.
All right, awesome. So for many of us on the call today, the elephant in the room is going to be tax reform. And
so we're starting off easy.
We're starting off easy, exactly,
Okay, right.
Exactly. So, and one of the favorite phrases we have here at SMS is the tax code is written in pencil. And to that point, you know, Congress can really change the tax code whenever it sees fit. I think that's a reminder for all of us to be mindful of what's happening on in DC, but also maybe at your local level as well, because that could come into play. So,
Sure.
Yeah.
Sure.
So real quickly here to kind of give a background specifically for this, I'm sure we have a lot of attention now with the new administration coming in with the Tax Cuts and Jobs Act. And just to give people a little bit of history, this actually dates back to the first term of President Trump in the first year where the Tax Cuts and Jobs Act was introduced and passed. And that really at the time was, you know, broad tax reform. And we really haven't seen much since then in the area of tax legislation. And it was passed through a process called reconciliation, which means many of the elements of this tax code are really set to expire at the end of 2025. And it really makes our jobs difficult, right? As it, you know, helping our clients navigate these things and not knowing what's going to happen this year is very difficult.
Yeah, it really makes it tough to do planning.
It does. So a number of things could come into play this year, but let's focus, Mark, on that last one, which really impacts, I feel, life insurance the most, and that's the federal estate tax exemption. So could you help us and explain kind of what's going on with these numbers and the portability rules?
Right.
Yeah.
So if you remember when we got into the business ourselves all those years ago, the federal estate tax exemption was $600,000, and it was incrementally going up based on inflation numbers, and then they decided to change the rules because what was happening is that people were just good savers, and they were getting caught in an estate tax situation. And what the exemption means is that if your estate is only that $600,000 or $5 million in 2011, you don't have to pay any federal estate tax.
Yeah.
So, I mean, this has become a political issue. It's talked about all the time. Really, it doesn't apply to the majority of the population.
Correct. I'd agree.
But it's a big issue. So they passed a law, and if you remember what happened in 2010, do you?
That was when we didn't have the estate tax.
That's when we didn't have the estate tax because
right.
it expired in 2010 based on a previous law change. And then it went away, and then they said, well, okay, we need to bump it up to $5 million, and so we're not catching the 401k millionaires anymore. And then, but that law was set to expire too, and again, they felt that people that had $5 million weren't necessarily shouldn't be subject to federal estate tax. Yeah. And so under the Trump administration, they bumped that number up when they passed that law the first time he was president. And, because of the reconciliation rules, they can pass a law without a filibuster, but they have to have it expire after a certain period of time because of budgetary constraints. So in 2025, that exemption is up to $13,990,000, but it is set to expire, and there would be no estate tax in 2026 unless, well, actually, it would revert back to the old numbers.
5.4 million.
5.4 million. But I think that with the president being a Republican and both houses of Congress being controlled by the Republicans, I think it's more than likely that they're going to pass something, and so we'll still have a pretty sizable federal estate tax.
Yeah, and we just don't know what that is at this point. I know there's a number of things, they judge it against the deficit numbers and that as well. But single party control, we just don't know what's going to happen. And then
the other piece of it is that they want to tie it into the, some people have talked about tying it into the immigration bill too. So I think they'll probably have to split it.
Yeah, a way to get through. So another thing happened last year in D.C. that impacted our business was a Supreme Court ruling, Connolly versus the United States. So let me just give a recap of what that was. Yeah.
So what Connolly said was that when you're looking at a situation when you have an entity buy sell. Mm-hmm. So just for an example, say you have a $10 million business and you have two owners, 50-50 owners.
Yep.
Each one owns 50% of the business. When one of them passes away, the entity, the business, buys that person's shares in the business, and then the other remaining owner is 100% owner of the whole company.
Sure.
And typically you fund that entity purchase with life insurance. So just a very simple example that we were using, the $10 million business, the business would own a $5 million policy on partner A, and it would own a $10 million or $5 million policy on partner B. Okay. What Connolly said that when one of those partners dies and then the business receives the tax proceeds, the business is, or the life insurance proceeds, the business is valued at the $10 million plus that $5 million pool of dollars.
Yeah.
So the business is actually worth $15 million. And so $7.5 million needs to be included in the person's estate for estate tax purposes.
Yeah. It's kind of a big deal.
Yeah, it's a huge deal.
Yeah. So obviously a great time to reconnect with the owner clients or the business owner clients. So I guess lessons learned there, keep track of things. If that's not your deal, we'll do it for you, right? So we have a team of people here that watches this every single day, and we'll keep you in the loop.
So I think it's really a great reason to reach out to your business owner clients, even though they may not have a business that is large enough that it would affect them from an estate tax purpose, or maybe they have a cross purchase buy sell that's not going to be affected by this either. But it's great to just reach out to the business owner and say, hey, this is something that happened that the Supreme Court had a decision on. I want to make sure it's not going to affect you.
Yeah.
And then you can kind of get into these other issues, and it may be a great opportunity for you.
That's the other thing. A lot of these things create a reason to connect with your clients as well. So, as you know, Mark, not every agent advisor works in the estate planning market and in the painful federal estate tax and or has business owner clients. But what are some ways life insurance can help the mass affluent with some of these issues we just talked about?
Yeah, as I mentioned earlier, I mean, the federal estate tax really only affects maybe 1% of the population in the United States. And so, but there's a whole lot of other people that are, not insured or underinsured, and they need coverage for a lot of reasons. One, the most obvious one is when they pass away, there's additional costs that somebody's going to have to pick up. They're going to have burial costs, and they're not getting cheap. If you've had somebody pass away in your family lately, it's pretty high. You're going to have to pay lawyers' fees. You're going to have to pay CPA fees possibly. And then there's also the liquidity reason. So, I don't think anybody that's been a beneficiary or of a life insurance policy has said, I really don't want this money. It always makes things a lot easier if you've got a pool of dollars to dip into for whatever reason. One big one is estate equalization. So this is fairly common in small business situations. It's very common in situations where people own farms, even sometimes when, personal residences or vacation homes. And it's a situation where only one of the children or two of the children are going to get going to get the business or they're going to get the farm. And there's others outside of it. Yeah. And you're just providing estate equalization with life insurance to make everything equal. Yep. And it's a great planning tool. You also have Social Security offset for married couples. And so when one of the people in the marriage passes away, the surviving spouse, their Social Security amount is going to go down. And so life insurance can provide the offset so they can continue to receive the same amount as they did when their spouse was alive. Yeah. Because I don't think their expenses are going to go down much. No. And of course, if someone's charitable minded, you always have the ability to use life insurance for charitable giving. It always helps if there's a pattern of giving to that charity already. Yeah. And maybe that's a better planning tool if you give an existing policy to a charity or make the charity a beneficiary and then get another policy for personal reasons.
Exactly. So obviously liquidity, you avoid the fire sale of property and assets, stabilization, maintain family harmony. So those are my key takeaways there. Yeah. So let's explore kind of a newer area of life insurance planning. It's called tax diversification. And, it really is hard to imagine our world without the 401k, or the IRA. But as you can see here, IRA celebrated its 50th birthday last year. And the popularity of these plans really has had a critical impact on our business in a lot of good ways too. You mentioned the savings aspects and the convenience of how it can help people, achieve financial security. And I look at this chart and it just kind of blows me away every single time. So if you think about in the last 50 years, basically went from zero, right? $0 in these plans now to 28 trillion dollars in IRAs and 401k plans. So a staggering amount of money in these plans. But there's also been what I feel are some unintended consequences. You mentioned the 401k millionaire and the IRA millionaire earlier. Great savers, great habits. We'll love to have those clients, right? However, being overweighted in tax-deferred retirement accounts could expose what we call tax risk. And really the whims of Washington, D.C. and how they may impact, not only their life, but what they can leave to their family or charities that they care about. So, we call this tax risk. And so kind of a newer way of planning now is something we see a lot of now being talked about is using life insurance to help people in these situations. So can you maybe recap the planning opportunities of using life insurance with people that have, 401ks and or IRAs?
Yeah, it's such an interesting psychological thing that has come about with IRAs and 401ks. It's almost kind of addictive.
Yeah.
I mean, you're always told it's a good thing to put all this money away in this 401k or this IRA, and you're getting the tax deduction, and nobody wants to pay taxes on money if they don't have to. Yep. And then you just watch those balances grow because of additional contributions through the years, or the assets are growing in value, and you want to do more and more and more and make that number bigger and bigger. Yep. But that has a huge tax consequence. If you've got $1 million IRA or $1 million 401k, really you probably only have $650,000, right?
I'd agree. Yep, exactly. Yep.
And so what do you do to try to minimize that? Particularly, if you're planning for retirement, you want as much retirement money as you can have. And so maybe it's good to, reposition that money a little bit. So cash value life insurance is a way to do that. So when that money comes out of the life insurance policy, it's income tax free. Yep. So, you can either try to set some plan up where you're pulling money out of the 401k and repositioning in it if you're after retirement age, so you don't have the
Penalty,
prepayment penalty for 59 before 59 and a half.
Yep.
But also maybe using capital transfer. So if you're somebody that's got the IRA or the 401k and you don't really plan on using that money, you just want to leave it to your kids, maybe life insurance is a better way to do that.
Yeah.
We used to do presentations a long time ago where, the question was always asked, would you rather inherit $1 million IRA or would you rather inherit $1 million brokerage account? And it's always the brokerage account because there's no tax consequence. So again, capital transfer is a great planning tool, pulling money out of the IRA or the 401k if you can, and then, in small enough doses that the tax hit's not too bad, and then reposition it into a tax-free death benefit. And then the last one is getting a life insurance policy just to help the beneficiaries pay the tax when they inherit the IRA. So again, if you've got $1 million IRA, somebody's going to have to pay that $350,000 of tax. So why not get a life insurance policy to help out those?
Well, it's a big burden
kids
to take on, right?
Yes.
Especially if you're in your 40s or 50s when mom passed. And that's a big deal. So,
it's huge.
So let's kind of switch gears to another area which to me is fascinating, and it's called demographic shifts and the impact of demographics on our business and what that means. So to explain kind of this pie chart here, this is actually the division of wealth amongst probably the four biggest cohorts we have out there, whether it's boomers, the silent generation, Gen X, or millennials. And as you can see, shouldn't really surprise you, Mark, that 51.8% of all financial assets are owned by the boomers, right? So
there's a lot of them.
There's a lot of them, and they've got time on their side in terms of accumulating wealth. So obviously, over the years, that wealth has to go somewhere. But before we get to that, I want to talk about what we call Peak 65. We're in this right now. So some call it the silver tsunami as well. But we've never in the history of the United States have had this many people turn 65 at one time. So it's kind of the trailing edge of the boomers, just reaching what is the normal retirement age of 65 today. But also going back to, we were talking about the 401k earlier, this is also the first generation where they have had their entire career to save with an IRA and 401k. So it really changes the dynamics there in terms of the planning. And then, the rise of women, there's a lot of successful women in the workforce. But also, too, think about other factors as well. The fact that women tend to outlive men. And I think it's surprising to learn that the average age of a widow in the United States is actually 59 years old. So what happens now, is they say within 5 years, women are going to control $30 trillion of assets. So we actually work with a lot of advisors who are kind of tweaking their practice to be more women-centric, right? And to appeal to women, because there's another stat that says, I think 70% of the women leave their husband's advisor when their husband passes on. So,
and same with the kids.
And same with the kids as well, which actually is a great segue into the next one, is the great wealth transfer. And we've seen 60, 70, 80, even maybe $100 million. Who really knows? But it's going to be a lot, right? You see trillions of dollars. But the idea here is that, that orange part of the pie is going to be passed on to a lot of people. Some may get a lot, some may get little, some may get some. But the idea there's going to be a lot of money in motion and a lot of opportunity to not only help people, but then you're going to be faced with a new generation of clientele.
Right.
So, yeah. So,
right.
But so what are some of those opportunities around demographics that we can use, life insurance? So,
well, as you have on the slide, the awareness and family discussions around the topic of legacy planning is really, really important. And I don't think there's probably a majority of the people in the country that see that fact that they should be having discussions with their kids. A lot of times the parents don't want the kids to know for whatever reason that what they're doing, and maybe it's sometimes because they've done nothing.
Correct.
And as you as an advisor can really help those people if they haven't done anything by bringing this topic up.
Yep.
And a lot of times, the kids probably don't want to bring it up either because they don't want to seem like they're waiting for mom and dad to die and achieve some sort of windfall. So, but it's always important to get this stuff out on the table. Interestingly enough, I just had this discussion with my dad.
Okay.
And, we actually had it before he was passed away.
Yeah.
So, I mean,
good.
He's not young. So, but it takes some time, and maybe we brought it up.
Yeah.
And there's the issue then of generational prosperity. Mm-hmm. And generational prosperity comes from generational wealth. And there's all kinds of studies out there that say that people that do not have generational wealth do not do well financially as a whole. Mm-hmm. And so whatever people can do to create generational prosperity, they probably should do. Yeah. If you care about, your kids, your grandkids, your great grandkids, and it's something to be concerned about. And what typically happens, at some point there's one generation, the generations before have had nothing, they're able to build up a little wealth through saving or whatever the case may be, and they pass that on, and it makes the next, it just elevates the prosperity of that next generation. I mean, and a good example is that, if you're going to buy a house leads to family stability for that family. Mm-hmm. And sometimes they don't have the down payment. And if mom and dad are able to help with that down payment, that creates a lot of stability in that family. It creates a lot of stability for those kids. But if the person that's going to be lending the money passes away early and there's no life insurance, that doesn't happen. Yeah, and that next generation then constantly struggles. Mm. They need a new furnace. They cost $13,000. Mm. They don't have any generational wealth. Where are they going to get it? Yeah. And they start this cycle of being in debt. Yeah. And they just can't ever get their head above water. Wow. One thing that you should always consider is doing beneficiary reviews. It's amazing, particularly looking at 401ks and IRAs and life insurance. They typically, or a lot of times, they don't have the beneficiary set up right. Mm-hmm. So, the primary beneficiary is usually the spouse. The secondary beneficiary, typically, not always, but, if they've actually done estate planning, it's supposed to be the trust that's created by the will. If they have small children, they don't do that. Yeah. They don't do that. And so you have all this nice estate plan and everything passes outside of it. Yeah. You can help with the organize their estate planning documents. Everybody should have estate planning documents of one nature or another. Typically powers of attorney, healthcare powers of attorney, and to the degree the advisors can help guide that discussion or get them to an attorney, that's great. And then, as Steve mentioned, what's the number again for surviving spouses, and they leave their
70%. Yeah.
Leave the deceased spouse's advisor. To the degree you can help with all of these things, and also to provide life insurance. I've never heard anybody complain about receiving a death benefit from life insurance. Yeah. Never, ever, ever, ever. Yeah. You're more likely to make those people a lot more sticky to you and stay with you.
Yeah, absolutely. So, let's switch product lines here, and we have another 70% up on the screen here. But I think consumers are really starting to realize the importance of long-term care insurance as a way to help pay for increasing costs. Maybe they experienced firsthand with mom and dad and saw those staggering costs. I know here at SMS, we're seeing an increase of people who are proactively planning for their needs. And what that number of 70 represents is, it's a well-known stat, is that 70% of the people who are 65 today will need some type of long-term care at some point in their life. And a lesser-known stat is that 20% of those will need care for 5 years or longer. And Mark, if you look at the cost of care, it's expensive. And everyone wants the best care for mom and dad, right? Or grandma and grandpa. So, but it comes with a cost. And unfortunately, because of those expenses, it could really put a financial strain at an important time in their life. And if legacy is a big part of that, that legacy could get dwindled. So, so I know we work in tandem with the long-term care division here, but also life insurance is a solution. Maybe kind of go over at a high level, Mark, what you see are some of the ways to get involved.
Yeah, and you make a great point though about you got to protect what you got.
Yep.
It's either your ability to earn a living or to protect those assets when you're not earning a living anymore. Yeah. And long-term care insurance is just critical. But we have so many varieties now that I think it kind of makes it difficult sometimes to, one, for an advisor to know what to suggest to their clients, and then to really understand the differences too. But that's what we have people here at SMS to help with.
Yeah.
I would put the folks that work here up against anybody in the country. Yeah. In that regard. But we do have like three main categories of long-term care coverage. It's traditional standalone long-term care coverage. It's kind of typically, it covers what the needs are. You can do a range of coverages and the benefits, as far as the slide says, customizable. There's fewer carriers that carry traditional standalone long-term care coverage. And then there's been a huge growth in the next two categories. One is utilizing life insurance with some sort of accelerated benefit rider for chronic illness or long-term care. It really gives a lot of flexibility to the life insurance. If you don't use the coverage as part of the long-term care rider, you still have the death benefit. And so it's kind of an attractive way to do it. There's all kinds of designs and types. If reimbursement, or is it indemnity, or is it just cover chronic illness and it's just like a lump sum benefit? There's all those available. And then the last one on the slide is hybrid long-term care. And this is kind of a combination of typically long-term care coverage and life insurance. It's life insurance technically, but it creates a pool of dollars that you can pull from. Yeah. So, there's a solution for everybody. Yeah. And it's definitely something that you should talk about.
Yeah. So I want to talk now about innovation. I know you and I both have been in this career for 3 decades or more, and it's amazing the amount of innovation we've seen and the amount of growth and change we've seen. And quite frankly, there's a lot of smart people in our industry as well, way smarter than probably me. But anyways, our industry really has to stay ahead of the curve to adapt to meet the needs of the modern consumer. If they don't, then people don't buy life insurance, right? So, and of course, we have AI and what that can do. Hopefully, people use it for the right reasons. But think about how innovation helps people, whether it's better products, cheaper products, faster underwriting, better technology, but really to create that better customer experience. And maybe one area that really has caught our eye the last year or so is Gallery. Maybe explain what that is.
You're right. I think there's probably been more innovation in the last few years with regard to how products work. Yeah. And then the things that you can get on them. I mean, the amount of living benefits on products. I mean, it's just exploded
Yeah.
over the last few years, and it really makes the products a lot more attractive because nobody thinks they're going to die.
No.
Right. But one of the more interesting ones that has come about in the last few years is the Grail Gallery test. And a Grail is a company, and Gallery is the test. And there's a couple of companies, life insurance companies, that make it available as part of their product. So they either give a reduced cost for the test, or provide it for free. And certainly, the team here can talk about those products. But the Gallery test is a multi-detection cancer test. So, with the Human Genome Project of a few years ago, it opened up all these doors for all this innovation. And one of them was the ability to detect cancer through genetic testing.
Wow, interesting.
So, what we learned is that, cancer cells shed a little bit, and then they can pick that up in the bloodstream. So what this blood test does, it can detect cancer in your body. Some cancers it detects better than others, but it also tells you where they're at. So it will detect cancer that's in your head region, and then you can ask for the proper testing to find it, or your gallbladder or whatever. But what you're able to do then is catch it early. A lot of routine screens won't catch cancer early.
Yeah.
And so for the cancers that have typical screening, like colorectal or mammograms for breast cancer, I mean, you don't stop doing that stuff. But this helps to find cancers out of them internally that you wouldn't know about until it's too late.
Interesting. So, so then obviously also educational workshops. So we have another tenant here at SMS called Empower Through Education, and we really want to help our advisors one of two things: retain clients, but also find new ones. Right. So being active in that prospecting market, and we've really seen and witnessed, a lot of our top advisors and agents use workshops to, bring this information to their clientele, whether it's long-term care, estate planning, retirement planning in general. So these are all relevant topics, and people want to be informed. And one of the things that I'm really proud of is our client stream package here.
Yeah, it's great.
It has offered at no cost, whether it's, information for workshops or stuff for social media, just tons and tons of content that's all financial based that we provide at no cost to the agents and advisors that we work with.
Yeah.
So, and then finally, our last topic is Medicare. Not that everyone on our call works in the Medicare space, but just wanted to kind of bring to light the partnership we have with the Medicare division here at SMS. We feel hands down that we have the best health and wealth platform in the business.
Absolutely.
Yep. And so last year, 2024, was very eventful for our friends over in the Medicare division. Many challenges, as you can see, for those working in the Medicare space, but also proud to say that despite all this disruption, we set records. SMS set records not only for Medicare supplement premium, but also for MA enrollments. And so 2024 went down as a banner year for SMS, both on the financial solutions side, but also the Medicare side. So, and we couldn't make that happen without the producers and agents and advisors we work with. So thank you very much. So to kind of wrap things up here are all the topics we went through. Maybe there was an idea that stuck with you or a client you thought of. But as you can see here, there's so many things going on. It's almost like a whirlwind, right? But as you can see, life insurance always floats to the top.
So, I just want to say one thing about the Medicare, a lot of you watching this probably don't do Medicare supplement planning or Medicare planning. But if you don't do that, we can help you.
Yep.
we have the ability to set a process up where we work with your clients and protect your clients and work with them on their Medicare planning.
Yeah.
And, you know, they're still your clients. We don't take your clients.
Yeah.
But it kind of insulates them from perhaps other people in the advisory
And that's
world.
a great segue, Mark, to our platform and how well-rounded we are, you know, whether it's Medicare back office, the health and wealth solution. So, you know, maybe bring us home about how the life insurance can help the producers who are already with us, you know, how we built up the platform, but also then maybe people who are brand new to SMS and how we can elevate their game in the life insurance business.
So, you know, we do have a lot of programs available for advisors that are interested in selling life insurance. I mean, I think you've talked about a little bit about, you know, Client Stream tool. We do have a lot of innovative technology. We did have a meeting the other day where we were talking to an advisor group, and they were considering whether they were going to come on with senior market sales. And one of the biggest complaints that they had was they had to remember so many different passwords to go to so many different platforms to do their business.
Yeah.
And we had a solution for that.
Yeah.
You know, everything is here behind the login in a single sign-on process. You know, we mentioned the health to wealth support that we provide, and so even if you're in the wealth space and you need help with the health space, we can do that.
Yeah, absolutely.
Okay, and then all advisors get dedicated support, assign you to someone to work with you, and they provide you all the assistance that you need, whether it's case design, support in the underwriting, case management process, and then we have a lot of marketing programs that are available as well.
So, Mark, for those on the call, if they want to reach out, here is the life number. So they can call one of the life marketers directly. There also is a survey at the end that they can fill out. We encourage you to fill out as well, because we want to learn about you and about your business and appreciate the time you gave us today. So anything you want to say before we wrap up?
No, I just want to say thank you. We look forward to working with all of you in the future. If you already have a marketer assigned to you, feel free to reach out to that person. If you had any questions about anything that's on today's content, we'll be more than happy to help. And if you're new to our organization and want to have a chat, just dial the number that's on the screen and ask for the life team, or you can ask for me personally, or you can ask for Steve. You know, we're all happy to help.
Yeah. Thanks so much.